I will teach you how to backtest, best free way to backtest. I'll review value throughout the entire video, so make sure you watch the entire video to know everything. You know what I'm saying? To know every single detail, because you need it. I'm sure you need it. It's very important, so do not skip the video. So the first piece of value I'll give away for free is GoCharting.com. This is basically TradingView's replay feature, but free. You know, so if you type in GoCharting, you know, I'm already logged in. You already know I'm always logged in. You know, I use this because it's free, and I'm not about to spend money on FX replay. Maybe if they sponsor me or something, I will. Let's say I want to backtest GBP USD. There is a history limit, which is unfortunate. However, it's okay. And then you just close your eyes and you double tap. I don't know where I'm at, but I'm here. So let's say you want to backtest the 4-hour time frame. Be careful to not go too low because it can reset you to the start, which is a little bit annoying. Let me give an example of that. So let's say I'm on a daily time frame, but then I go on the 1-hour time frame. See, it will say you're not allowed to go that far, right? So what I usually do for that to not happen is I select the lowest time frame I use. So let's say I use the 5-minute time frame as the lowest time frame for confirmations, etc. I then scroll to the back, double tap, and I'll be allowed to actually trade here, which is obviously good. So let's go to so now I can go to any time frame I want. Any time frame above 5-minute time frame, and I will know that I will not get reset to the start. So let's say, so first let's see the daily time frame. What is it looking like? Okay, so what can we see here? We can see an uptrend, of course, change of character here. So you can see a change of character here. And so the price retraced. So the price retraced, reached this demand area, order block, whatever you want to call it. And, you know, let off wicks, long wicks, showing rejection, whatever. The price breaking in structure. The price breaking in structure right here. I like to draw the top of the green candle because that's what has always worked for me. Here we can see the price returned to this equilibrium, I'm sure. Yeah, a little bit past the equilibrium. Has a nice doji candlestick. I would have most definitely entered there. You know, it's just retracing. You know, it broke structure, retracing, doji candle around the equilibrium area, under the equilibrium, under the 50% area in the Fibonacci, which is the equilibrium. With a doji candlestick, I'm entering that. You know, I would have entered here, cool, blah, 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 whatever. But now we're trying to enter a position here. This is the 1-day time frame. Let's say we're trying to intraday trade more. And yeah, we're trying to maybe reach the middle of this fair value gap. That's what I like to see as, you know. So where did the expansion happen from here? Okay, the price has reached this area. Now all I need to do is go to the 15-minute time frame, the lower time frame in general, and see what's going on. Okay, cool. So I would have entered so I'm gonna place a position here. Nice risk to reward ratio. And enter. This is just a fast sort of analysis. This see what I mean? Return to the expansion. What does that tell me? Sorry, I would have exited right there. Right, this is the demand zone, supply zone, whatever. But anyway, like here you can use this to sort of know where you went wrong. Of course, you're not going to get every trade correct, but what could I have done here that's better? Let's see. And this is how I backtest. I have a piece of paper here that I write down my trades with. It says date, pair, type, entry price, profit loss, risk to reward ratio, and comments. So here, I'm not sure if you can see this. It says this, right? It's comments, you know, it's date, pair, type, entry price, profit loss, aura, and comments. And I write this. I write what I could have done right, what I could have done better. So in this case, what could I have done better? I could have waited until the price return to the expansion for a better confirmation. So in this case, I should have waited until the price reached this area right here, because this is where the price expanded from. This is where the break of structure occurred. So I would have most definitely waited until the price came back here, and on the lower time frame, see, it does that sometimes. That's very annoying. From here, you can't really do anything. But anyway, you can see what I would do from there. Let's replay. There we go. I've reached this area right here. Oh, so I came back to this area right here. I write down what I do, what I did right, what I did wrong. If it's a loss, I probably didn't do anything right. So what I do is write what my mistake was. So next time I don't do it, because you gotta learn from your mistakes, of course. That's the #1 trading rule. It's very good for analyzing one time frame. So let's analyze the 15-minute time frame. Here we're on a downtrend. I usually look at higher time frames, of course. I mean, to me, this is a break of structure, a retracement, and a potential continuation back up. There we go. So right now that's at 8:45 a.m. We drew a horizontal line to the area which it expanded out of, structure or change of character area, and that's right here. So we can see the price return to this area, and I will actually enter. I would enter the position right here. So I'll place a short position here. I would place, see what I mean? It can get annoying. It's okay, it's free. Oh my days, very annoying, very annoying. Yeah, I'm actually gonna break something. I'm actually not even lying. What the Yo, what? Okay, that's crazy. Yeah, I can't even press nothing, that's crazy. Over here. And see where I could go, you know what I'm saying? So here, I would have got stopped out, and the price will continue downwards for sure. See, I knew. So clearly what I've done wrong, of course, you can see there's a fair value gap, right? And so the price might reach to the fair value gap. So making the stop loss bigger would be wiser. So this is what I would write down on the comments. I would say, okay, make stop loss bigger next time. Remember to do this, blah, blah, blah. If you would like to print that sheet out for yourself, you can either get Excel if you have it, or you could go to Google Sheets, sign in. I actually got ChatGPT to make my one, and I just pasted it into the spreadsheet on Google Sheets, you know, expanded. You can watch YouTube videos on how to do this. I'm not about to do all that. It's too long. Make sure you watch the next video I make, because I'll provide even more value. So make sure you do that, because you cannot, if you miss it, you will miss out on wisdom, knowledge. Why would you want to do that? You want to improve. So go ahead and do that.